everyone. Welcome to Income Investors. My name is John Whitefoot, and with me today is Zulfiqar with a quick economic update. Now, our goal with these videos is not to tell you what to buy or sell, but rather inform you what's happening more broadly with the economy. And if you want to read more about what Income Investors is all about, head to incomeinvestors.com. You can find a link to the website in the description below. Now, with that said, Mo, what have you got for us today?
Hey, John. Today, I want to talk about interest rates. And more specifically, I want to touch on the idea that what if the interest rates don't go down in 2024? Or what if interest rates actually increase this year?
Sorry, I don't mean to cut you off here, but I thought the Federal Reserve itself told us that will absolutely be interest rate cuts this year. And if memory serves correct, some analysts are even expecting up to 6 interest rate cuts in 2024 alone.
John, you are right. The Federal Reserve has hinted that there will be cuts in 2024, but something interesting has happened over the past few months, and that's why I'm asking if interest rates, don't go down this year. You see, in late 2023, everyone was expecting Federal Reserve to cut its benchmark interest rates. And, some were expecting 6 cuts. And I remember even seeing some analysts expecting 8 cuts in 2024. All of this has changed. Now, expectations are that the Fed will only cut rates twice this year. And just so you know, by 2 rate cut, it means just 0.5% rate cuts. Federal Reserve benchmark interest rates or federal fund rate is around 5%. And you may ask, why is that? I say, keep the big picture in mind. The Federal Reserve has started to raise interest rates because it wanted to curb inflation. We got several decade high inflation very quickly, and high inflation tends to be harmful to the economy, consumers, and so on and so forth. Here's the thing though, Federal Reserve has been able to tackle some of the inflation, but some of it remains very sticky. And here's something more concerning. A few days ago, we got reading for US consumer inflation, and it came in hotter than expected. Over the past few months, inflation has somewhat accelerated, and this has even sparked debate that the Fed might have to even raise rates rather than cut any.
So what does all this mean, or what does this have to do with investing?
Well, all the peak rate and rate cut noise from last year and earlier this year caused a spike in, places like technology stocks. Investors bought them because they tend to do well in low rate environment. Going forward, though, it is possible that these stocks that are interest rate sensitive face some headwinds. But that's not all. I also have to ask what happens to places like bonds market. Investors, as everyone was expecting rate cuts, investors rushed to buy bonds. And as rate cuts noise got louder, we started to see yields come down. But now, when we are saying that there may not be rate cuts or even a rate hike, it's possible that investors start to reposition their portfolio. And this could be bad news for the bond market as well. And other assets like real estate could be impacted as well. All in all, rates not moving much in 2024 could mean a lot of repositioning of portfolios. Big institutional funds could be looking at, hey, should we own bonds? Should we not own bonds? Should we buy stocks? Should we not buy stocks? And this could cause significant gyration in the financial world.
How will this affect dividend stocks?
If you are an income investor, no rate cut or even a rate hike could be a great news for you. And I know this sounds a little odd, but usually when interest rates are high, you see dividend yields spike a little too. So income investors could get another chance to make higher income. In the end, what I'd like to say that after the global financial crisis of 2008 and 2009, investors didn't really have many avenues to generate decent income. Now, with possibility of rates remaining high, I think it's a great time for income-seeking investors. There are lots of opportunities out there, but you just have to look.
Thanks for all your insights, Mo, even though I think most of us don't want to see interest rates go higher. But if you want to check out Income Investors is all about, you can find the link in our website in the description below. While you're there, you can sign up for one of our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. We will be back with Income Picks soon, so stay tuned and don't forget to like the video and subscribe to our channel. Goodbye for now.